Hello, wonderful people. It's the Flow Journal with your weekly market recap. Today is February 8th, 2026, and we're looking back at the week of February 2nd through the 6th. Let's unpack the moves, the macro stories, and what it all means. This was a tale of two halves. Early in the week, U.S. stocks wobbled on AI worries, but by Friday, the Dow Jones Industrial Average leapt past the historic 50,000 mark, and many sectors rallied. For the week, the Dow gained about 2.5%. The S&P 500 slipped 0.1%, and the tech-heavy Nasdaq lost 1.9%. Investors balanced a steady Federal Reserve, hotter wholesale inflation data, a looming government shutdown, and a wave of earnings against heavy talk of artificial intelligence spending and disruption. Global and macro context. Federal Reserve. Policymakers left the overnight Fed funds rate unchanged on Wednesday, signaling that strong economic growth and still elevated inflation mean their work isn't finished. Inflation and rates. December's producer price index surprised to the upside, hinting that parts of inflation remain stubborn. Long-term Treasury yields, which had been drifting lower since autumn, moved higher again, pushing up borrowing costs. Fed leadership. President Trump nominated former Fed Governor Kevin Warsh, to replace Chair Jerome Powell. Warsh is known as an inflation hawk. The U.S. dollar rallied and gold prices fell on the news. Trade and government. The White House announced a trade deal with India that reduces tariffs in exchange for India curbing purchases of Russian oil. A partial government shutdown delayed the January jobs report. Manufacturing. The ISM Manufacturing Index showed U.S. factory activity expanding for the first time in a year. Inflation expectations abroad. Global investors also watched Japan's weak yen and surging bond yields, while Europe's growth remained tepid. International developed markets rose 0.8%, outperforming the S&P 500. U.S. markets and data. Monday, Feb 2, rally on memory stocks. Indexes soar. The Dow jumped 15 points, or 1.1%. The S&P 500 gained 0.5%, and the Nasdaq rose 0.6%, nearly setting records. Leaders: memory chip makers, SanDisk, plus on 15%, and Western Digital, plus 8%, led the rally. Caterpillar and Walmart added 5% and 4%, respectively. Traders welcome talk of a U.S.-India tariff deal. Macro notes. Oil prices sank about 4.12% to $62 a barrel after geopolitical comments. Gold slipped to around $4,700 and silver rebounded. The 10-year Treasury yield hovered near 4.28%. Tuesday, Feb 3, tech-driven sell-off indexes drop. After hitting a new intraday high, the Dow closed down 0.3%, the S&P 500 fell 0.8%, and the Nasdaq slid 1.4%. AI worries. A rotation out of tech dragged on all of the Magnificent Seven stocks. Microsoft and Nvidia fell around 3%, while Palantir, pronounced Palantir, jumped almost 7% after strong results. Earnings movers. Gartner sank 21% on weak guidance. DaVita, plus 21%. Teradyne, plus 113%. And PepsiCo, plus 5%, rallied. PayPal plunged 20%. Pfizer, 3.5%. Walt Disney shares slipped despite naming a new CEO, while Walmart joined the $1 trillion market cap club. Commodities. Gold rebounded 7% to 4,970 Oz. Silver jumped 10%, oil bounced around $64, and Bitcoin swung down near $72,900 before recovering. Housing angle. Reports of a potential Trump Homes rent-to-own program lifted homebuilders like Lennar and Taylor Morrison by more than 3%. Wednesday, Feb 4. Persistent tech pressure indexes split. The Nasdaq dropped 1.5% and the S&P 500 shed 0.5%, while the Dow rose 0.5% thanks to an 8% jump in Amgen, pronounced Amgen. AI disruption fears. Software stocks sold off again after Anthropic released productivity tools. Tesla slid 3.8%, Nvidia 3.4%, Alphabet 2%, and Amazon 2.4%. Earnings standouts. AMD tumbled 17% despite beating estimates. On the upside, Enphase Energy surged 39%. Supermicro Computer jumped 14%. Eli Lilly, EE gained 10%, while Silicon Laboratories skyrocketed nearly 50% after being bought by Texas Instruments. Markets and yields. Bitcoin touched $72,100 before rebounding. Gold inched up to 4,970 Aussie and silver to 86.75. The US dollar index firmed and the 10-year yield ticked up to 4.28%. WTI crude climbed 2% to 64.50. Thursday, Feb 5, AI CapEx jitters. Heavy losses. Wall Street sold off sharply as Alphabet revealed plans to spend up to $185 billion on AI in 2026. Investors worried whether such spending would translate into profits. Big declines. Microsoft fell 5%, Palantir 6.8%, Oracle 7%, and Amazon about 4.4% in regular trade. Amazon then slid another 10% after hours. Nvidia slipped 1.4%. Broader sell-off. The S&P 500 fell 1.23% to 6,798.40. The Nasdaq dropped 1.59% to 22,540.59, and the Dow lost 1.20% to 48,908.72. 9 of 11 sectors fell, led by materials and consumer discretionary. Economic data. New unemployment claims unexpectedly rose and job openings slid to a 5-year low. Stock stories. Snap fell over 13% despite beating revenue. Estee Lauder dropped 19% on a weak outlook. Tapestry jumped 10% and Hershey climbed 9% on solid forecasts. Friday, Feb 6, AI chip rebound and historic high record close. The Dow broke above 50,000, closing at 5115.67, 2.47%, while the S&P 500 rose 1.97% to 6,932.30, and the Nasdaq surged 2.18% to 23,031.21. Winners and losers: chip giants Nvidia was 7.8%, AMD was 8.3%, and Broadcom was 7.1% led gains. Amazon slid 5.6% as it forecast a more than 50% jump in capital expenditures, but the spending outlook sparked hopes for chip makers. CrowdStrike and Palantir bounced more than 4%. Sector rotation. Information technology stocks jumped 4.1%. Industrials rose 2.84%. Energy hit a record high. Weekly scorecard. Despite the Friday rally, the S&P 500 still ended the week slightly lower, and the Nasdaq shed 1.9%, while the Dow gained 2.5%. Over half of S&P companies have reported earnings, and roughly 80% have beaten expectations. What to watch next? Looking ahead, a delayed January employment report is expected to show slower job growth, but a steady unemployment rate around 4.4%. Markets will also digest more corporate earnings, especially from tech and industrial giants. Keep an eye on further inflation data and any resolution of the government shutdown. Investor focus on AI spending isn't going away. Watch how companies justify these investments and whether they boost profits. Finally, note how rotation into sectors like energy and industrials continues after this week's tech volatility. That wraps up our recap. If you found this useful, stay tuned for the next update. I'll be here every week to keep you grounded amid the noise. Take care.